Hello, my name is Kurt Worley. I am the quantitative analyst and a currency coach at FXBootcamp.com. Today is Tuesday, November 22nd, 2011. This is a video review of some of the price action we covered in the live class today at FXBootcamp.com during the New York morning session. First, let me remind you that the purpose of FX Bootcamp is education. We do not provide an alert service, and the currency coaches do not make trade recommendations, but we do provide real-time technical and fundamental analysis to help you put together your trade plans throughout the day. And we remind everyone that past trading performance does not predict future results. Do not trade money you cannot afford to lose. What you now see is a 4-hour chart for the Euro-USD currency pair as that chart looked at 7 a.m. New York time today on GFT's Dealbook 360 trading platform. Now, we discussed the roles that moving averages can play on the charts in countless prior videos and during our live coaching sessions at FX Bootcamp over time. This chart is a pretty good example of how the 55 EMA can serve as a source of dynamic support for a period of time. Then after a change in trend, its role can change to a source of dynamic resistance. Looking now on the left-hand side of this chart, notice how the 55 EMA, that's the blue line in this chart, notice how the 55 EMA was a sort of moving floor for the euro. That was in the latter half of October. Now let's zoom in a little bit on this chart. After the big euro sell-off on October 31st and November 1st, which I'm highlighting now in the upper left-hand portion of the chart, after that sell-off, the 55 EMA has not worked perfectly as a sort of moving ceiling for the euro, but by and large, this pair has spent most of its time below that 55 EMA since the start of the month. I mentioned, looking in the lower right-hand portion of the chart now, I mentioned in last Friday's New York session video review that the 4-hour 55 EMA helped put a lid on the euro's London session rally that day. And about 40 minutes ago, looking on the far right-hand side, about 40 minutes ago during the 6 a.m. hour in New York, the euro reached its 4-hour 55 EMA again and is currently about 20 pips below it. Now, what was interesting for euro bears today, is that there was another prospective source of resistance sitting near that 4-hour 55 EMA at the time. Let's take a look at that on a different chart. This is how the 15-minute chart looked at 7:30 a.m. New York time. Looking on the upper right-hand portion of the chart, now you can see that today's high was established not only at a 4-hour 55 EMA, but also at today's M4 pivot point, represented by a horizontal maroon-colored line near the top of the chart. So given that combination of 4-hour 55 EMA plus daily M4 pivot point, it wasn't crazy at all to take a euro short somewhere in there. Now, if you're more conservative and chose instead for further confirmation that today's London morning uptrend has run its course, you've got that now. This chart is now showing regular bearish divergence. Here's a higher high in price, and look at the stochastic subgraph at the bottom of this chart. You have lower highs in stochastics. One more clue from previous price action for euro bears worth mentioning here. Notice today's London morning highs, which I'm highlighting now with two blue arrows. Those highs established at about 1.3555. That level was resistance earlier and could provide a sort of ceiling for the euro again later. Let's add a line now at 1.3555. If you were looking for a second chance to short the euro, you got that chance less than 5 minutes before 8 a.m. New York time. Note in the upper right-hand portion of the chart, note the touch of that horizontal blue line at 35.55. If you took the shot, a simple worst-case exit strategy could be to close the trade for a modest loss if the euro rises a few pips above the daily M4 pivot point, which again is represented by the horizontal maroon colored line near the top of the chart. You can move your stop loss to break even after the euro broke below this recent series of lows that I'm highlighting now in blue. And I've got a separate chart which explains a logical profit target for this short trade. Looking on the right-hand side of this chart, this is an hourly chart by the way, the 1.3480 to 3490 area was a logical profit target given the 61.8% Fibonacci retracement level of the rise up from yesterday's low to today's high. That 61.8% fib represented by a horizontal blue line at 3482 that I'm pointing to now. The daily central pivot point represented by a horizontal black line was just a few pips above that. And the red trend line I'm pointing to now, that trend line is based on last Friday's high and Monday's high. That was passing through the area at the time as well. By the way, every clue to the short trade setup that I mentioned earlier in this video, I also discussed in advance in the live class with about 120 people logged into our trading room, and I also mentioned these prospective sources of support shown in this chart before the euro reached that 1.3480 to 3490 area. Okay, quick summary of the trade. Short trade entry option number 1 about there, option number 2 right in there. Exit again in this range between 3480 and 3490. And you didn't have to be perfect with your entry and exit to catch a good chunk of that 84 pip drop from there to there. Again, my name is Kurt Worley, and this has been your New York session video review from FXBootcamp.com for Tuesday, November 22nd.